Austro, South Africa's largest distributor of premium machines and tools, saw a rise in adjusted headline earnings. I'm joined now by the chief executive of the firm, Paul Mansour, to help us look at the numbers. Thank you so much for joining us today.
Thanks for having me.
I'm losing my teeth, so I might need a few tools by the end of this conversation. Looking at your results, it has been quite a good period for you, despite the challenges that you've experienced in the South African market.
Yes, we were happy with the amount of revenue growth that we were able to achieve in relatively subdued markets. Our revenue was up around about 16%. And then we did a lot of work sort of on our cost side of the business, and that overall helped us grow our adjusted earnings by a little bit over 60%.
Just on that, I want to understand just exactly how difficult is the South African market. You obviously deal with the mining space. The strikes must have impacted on your books.
We were quite fortunate with the strikes in that we were able to plan well ahead for them, because we could sort of see them coming, and we built our relationships with our staff. So through the planning and working closely with staff, we were able to get through relatively unscathed. So we were happy about that.
Are any of your workers unionized?
Our workers are all unionized, but we were able to work well with them. We were able to run night shifts. Some of the staff came in.
How do you do that? And I ask that because whenever we speak to CEOs of companies like Invicta, they talk about how difficult it has been, and there's a trust deficit between employees and workers.
We work very closely on it. We, as executives, we speak directly with staff. We build our relationships with the shop stewards, and we make sure that our staff are able to achieve their objectives in a union environment, and we're able to achieve our objectives.
That's a fantastic story. Do keep it up, hopefully. Tell us more about the name change to the business. NX, even though it's spelled ENX.
Yes, so Austro grew out of the wood business. So when Austro went public, its major asset was the wood business, and that was in 2007. And since then, the group has evolved quite significantly. So we have quite a big power segment now. We're bringing on a fuel segment. So we need to rename the group to better represent the direction that we're taking the group into, and that's very much going to be a focus on the energy space. And we thought that NX, which is short for energy exchange, better represents where we're trying to take the group.
Tell us about the energy developments.
Yes, so we're going to drive the growth of the group through two major clusters. It's going to be our power cluster, which we already have a presence in, and then a fuel cluster, which we've recently made an acquisition, and that's going to be the foundation for our fuel cluster, and we're going to grow it through that. We're going to be focused mainly on downstream activities. The upstream activities we're going to leave to the majors. It's expensive and risky.
What's the difference between the two?
The upstream is when you're primarily involved in exploration, and then the downstream is when you're much closer to the customer with the end product of the energy product.
With this in mind, does this mean that you'll also be looking at the rest of Sub-Saharan Africa, where we've had the oil discoveries and fuel discoveries when it comes to energy?
Yes, absolutely. Sub-Saharan Africa is a focus of ours, and what we'd like to do is build nice production hubs in South Africa, and then move our products up into Sub-Saharan Africa. There's plenty of demand for power and fuel products in those regions.
Are you in Mozambique?
Not yet. But funny enough, the oil major that we represent in South Africa through the lubricants business that we bought, ENR, has a big exploration drive in a gas. They found gas off the coast of Mozambique. So there's a link there.
And what about coming closer to home, the legislative environment when it comes to the oil and gas industry and energy overall? Is that stifling your opportunities?
No, we're not so much impacted by that. I think that's more on the upstream side of the fuel industry, so we're not so much impacted by that.
I'm going to take a chance here and see if you're an oil price expert, but at these levels, below the $80 a barrel mark, does that play any benefit to you?
Yes, very much so. In the lubricant business, a major raw material is base oils, and base oils is a refined product from oil. So we're starting to see the cost of our base oil coming down. That will help us on our margins and potentially help us be more price competitive if we're able to adjust our prices down and still retain our margins because of the benefit we get from that.
You also didn't declare a dividend for this year. How come?
Yes, we're very much in a growth phase. The business hasn't declared a dividend for some time. We want the cash for acquisitions and to grow aggressively. We're trying to get out of the sort of micro cap mold into the small cap universe, and we need our cash for growth.
need your cash for growth. While shareholders have been quite optimistic, your share price has gone up by more than 70% year to date. Your words to shareholders and what they can keep you accountable to in the next year.
Yeah, I think they should stick with us. We've got a nice growth story. We've got a clear strategy. We've cleaned up a lot of the difficult bits that we found with the company when we joined around about 18 months ago. They can see the new acquisition that we've brought in. That new acquisition has just signed a distributorship with Mobil, so we're going to be distributing Mobil oil lubricants. So we're in an exciting growth phase. Our shareholders should stick with us. They should be patient, and over a medium to long term time frame, we'll deliver them good returns.